Hey guys, Mike here. So normally March is a very good month for the stock market and investors, but as you see by today, thanks to Russia invading Ukraine, we were already in a volatile market. Now we're even in a more volatile market thanks to oil skyrocketing because of that invasion and the sanctions being put on them. And if it continues to drag out for a long time, you can see oil going much higher. So it's just not good for anybody's economy or any of our pocketbooks for that matter. So as I announced to the members this morning, showing how much gas had already gone up in such a short amount of time. So but there's one thing we need to talk about, and it's basically like another log being thrown on the fire of volatility that could make this month not such a good month, right? Because March is normally a very good month, and I'm going to show you that, but I'm going to show you why this just might not be that good of a March for any of us, okay? And so if you get anything out of it, hit the like, subscribe button for me, guys. Make sure you hit alerts all so you get all notifications, especially if you're a member. I really appreciate it. And let's go ahead and get into what March would normally look like. And so here's March normally. As you can see, S&P monthly returns since 1950. And then you get S&P monthly returns past the 20 years. You get even more returns. And then you get S&P monthly returns over the last 10 years. And you can see it pop up very nice right there. March and April actually were usually both really good months in the S&P. So if we go through and break this down, I like to look at each year. So if you go back to 2010, let's take the last 10 years. You can see right here we're coming out of the 08-09 crash, right? So we had a blue year in that March. 2011 we end up down almost 1%. 2012 we end up going up almost 5%. So that was a nice year. Then we go into 2013, and you can see you get another nice about 3% move up, which is good to see. And so everything's looking nice. Then you go into 2014, make sure you remember this year right here. Then you go down with 1%. Then we go into 2015, you're going down about 2.5%. Going into 2016, you got up about 5% right there. And then we go in 2017, and you can see a bunch of interest rate hikes happening this year. And we end up about 0.65, about 1% up on that year. And then going in 2018, make sure you really remember this year, down about 4.5%. And then the last one, 2019, up around 4%. And so now, as you can see by looking at the chart, you're looking at about a 60-40 split, right? 60 positive in March, about 40% is negative in March. And so now let's go back to those years I told you to remember, right? 2014, 2018. And as you can see, 2018, obviously we were going through interest rate hikes during that year, but there was also some else we were going through, and you can see it's in the red, right? Then we go into 2014, and you had almost something kind of similar. You had the Crimean crisis happening in March where Russia invaded them, and you're down around 2.15%. And so what is the other log that can be thrown on this fire of volatility that's happening? Well, 2014, 4 years later, 2018, now we're in 2022. What do we have coming up? Midterm elections. And yes, politics does affect the stock market. As you can see right here, this is the S&P 500 index average year-to-date return from 1931 to around 2018. You can see all of the years looking good, right? Moving up. Midterm election years, though, not good at all until you get to around October, somewhere near the end of, before the midterm elections. Then you see a huge run prior and after the elections are held. Then you look at what it does when it comes to volatility. Volatility spike in month leading up to midterm elections. Obviously, January we just came out of, which is a hugely volatile month. February wasn't much better. You can see March right there, but you can see where it really picks up as far as the volatility concerned is going to be in the summertime. And I want to show you this chart just to show you what the internet has done for us, right? And the reason why I say the internet, because look at what it was doing from George H.W. Bush all the way to the left, right? And then look how far up this thing ran when Clinton got in office, and it has really nothing to do with Clinton, but has to do with the internet, right? The internet came out around, 93, something like that, and then it started becoming readily available in the end of the 90s, early 2000s, right? And it kind of changed the stock market, right? Because look at it. Look at these huge run-ups. Plus you had trade, we started opening up the economy to more trading, things like that with other countries. And so, just amazing. But look at also the massive drops. I mean, that is just amazing to look at right there, what we've gone through just since like 94 going forward. And believe it or not, it actually does matter who wins and how the House, the Senate, and the presidency is actually divided up with each party, because that actually does affect the market. I'm going to show you that to you. But understand that usually when a president first gets in office, when they have the first midterm election, the other party normally wins. Okay, it's happened all the way, as far as I know, in my mind, going all the way back to Clinton. And so it's just normal. I don't know why it works out that way, but it seems to work out that way. And so, as you can see right here, this is the average S&P 500 index annual returns from 1950 to 2019. And when you got a Democratic president, and then you end up with a Democratic Congress, you only get 13.2% returns. But when you have it split and the Republicans are in charge of Congress, it's around 18.3%. And if you have a split Congress, it's almost 16%, right? Versus when there's a Republican president, obviously you can see down there the split Congress is almost 17.9%. And honestly, I don't know the main reason behind this. The only thing I can think, honestly, is because, the stock market likes when one party can't just ram home their agenda, right? So if they had all the branches, they could just do whatever they wanted to do. And so maybe with it split, it creates more gridlock or maybe more common sense approach to certain things. And so the stock market tends to like that. Investors seem to like that more. And so maybe that's what it is. If you know the main reason or have an idea, go ahead and put it down in the comments for us. And so, coming up this November, what should happen, according to history and according, to what's really happening right now, is Republicans should take the Senate at least, if not the Senate and the House. So you'll see, a lot more gridlock, but the markets obviously tend to like that over time. And so if that does happen, we could see the market move up pre-November, and then obviously if it happens the way it's supposed to happen, start moving up in November and December. And so we'll see what happens on that. Another thing to keep a close eye on, which I was going to bring up, and I'll just put it in this video, is what's happening to margin debt right now. And this is something we've been keeping a close eye on. And, we always said this was like a predictor of market corrections. Well, it's come true basically once again, because we're obviously in a correction. S&P, the NASDAQ's already reached 20%, which is technically a bear market. But as you can see, massive drops. And the only time you see massive drops like that is, during massive corrections, or the last two were crashes, the dot-com bubble and then the 08 one as well, both recessions as well. And so, you can see where it's at. It's the only two that it actually looks like. We're going to have to see. This is in January. We'll see where February falls. And it's because, people are risk off, right? And so, the plus of that is a lot of margins sitting on the sidelines and a lot of money still sitting on the sidelines, which you can see come in, which is maybe what you saw last week when we had the two up days. And so we're going to have to see, what's going on. But this is just something else, these midterm elections and all the stuff that's, going to bring even more volatility, if that's even possible right now, because these markets are absolutely insane. I joked around with members this morning, it'll probably be down 3% opening, up 2% in the afternoon. And we've seen these swings multiple times just in the last couple of weeks. And so, the Russia-Ukraine thing does not help. I don't know how long that's going to go on for. But the one thing to keep an eye on, which a lot of people think is going to happen if it does keep up, that is going to force the Fed that, they're not going to be able to act. They're not going to raise any interest rates at all, right? Because of what's happening here. Now, of course, rising oil and energy costs going up is going to contribute to even more inflation and rising. So I don't understand how they're just going to sit there and do nothing. But at least 0.5%, I think people are taking off the table for sure. At worst case scenario, 0.25%. But I find it funny that as I send news out to the members every morning, Russia just raised their interest rate. I think it was by 20% or something like that. I think it was Argentina raising theirs over 50% for interest rates, and here we are, we're at about 0.25%. It's amazing, right? 0.5%. Everybody's sweating bullets about 0.5%. Yeah, not even a percent. And, we haven't been over 2.5 on the Fed's fund rate in years. And so it's mind-boggling to me. Anyway, I want to put that out there to you. Let me know what you think. If you got any answers for, why the market's so volatile during midterm elections and stuff like that, or why they like split Congresses and tend to have better returns than that, let me know. So I think I did a good job of staying apolitical in this video, so I'll pat myself on the back for that. And this is not a political video at all, so I'm not getting into that stuff. So anyway, hope you guys got something out of it. Hit the like, subscribe button if you did. And don't forget to hit all notifications there. And I'll see you guys tomorrow.